What's up, Get Money team, man? Welcome back to another video. If you're new here, whoa.
5,500 boss niggas getting money. 5,500 boss niggas getting money.
Today's video, we are talking about, I think it's like a third basics video. This is the last video we got until really getting into like learning strategies and shit like that. But for today, we are worried about key levels. Basically, what key levels on the chart are is like just a place where you see, it's either a place where you see price keep coming back to, or it's a place where price retraces to before continuing its move up or down, if that makes sense. So like, let's take a look. All right, cool. So we on a 4-hour chart right now. Like on this move up right here that we looking at, right? This whole move up right here, the bottom of this move before it even started moving up. So this will be one key level. Then we go up, we retrace down into right here. There's another one. Basically on every move up or down, every pullback is I set as a key level, right? Boom. And the reason why these is important is because one thing you need to know about the market is it's only two ways price can move, up and down. When to move up, it gotta move down, especially when you have a whole bunch of space like this, when there's nothing on the opposite side of this. Orders is itching to get filled here, right? So these key levels is basically like a magnet for price. So when we get on the chart and we're looking at key levels, or we're looking for key levels, it's not really for right now. Most of the time we're doing it is because the other side of it, right? So y'all can see this, every single one of these levels that I made, price came back and either blew through it or just hit it, right? So right here, you see it blew through this level right here, came back up, and it played around along this line for a little bit before it really came down. This could have been an entry right here on this one because it blew through this level, it came back, and it didn't really go all the way up through it. It kind of bounced off of it a little bit before it continued down. So when you think about it, like just finding these key levels, it kind of is a strategy in itself, because when you mark off these levels, you know the price is either gonna come back and blow through it or reject off of it, so you can look for that in the future, if that makes sense, right? All right, let's use this move up as an example, right? Well, we know what trend we're looking at because the market's either gonna create higher highs and higher lows, or lower highs and lower lows. On my chart, I don't have green and red candles. I have blue and black candles. So a blue candle is gonna be a bullish candle, and a black candle is gonna be bearish, right? It's gonna be, so we see we got move, pullback, move, pullback, move, pullback, but every single one is still on top of the other one, right? Now, like I said, this is good to see if, like, you know, this right here, I might come back to this level and move up, but it's really not for that. It's really for the other side of this. This would be the top of this move because this is the highest it got. Let me mark off the highs too. So these is all of these boxes is the highest points of these moves, right? When it come and it retrace, and then it come back up here, then it retrace again, and it come back up here, and it retrace again and come back, right? So these are all the highs, right? And some of these highs is not higher than the other ones, but that's why you make sure you're marking off the lows. I don't really mark off the highs. I just make sure when it's a bullish movement, I just mark off the lows. I don't really mark off the highs because some of them might be higher than the other ones. Some might be lower than the other ones. But I really just mark off the lows because that's what matters when we're looking at an upward move, if we're thinking about a reversal to the downside, right? So we got this good move up right here, and this was the last high. We can see we had this move down, and the next two bullish candles, they didn't even make it all the way up to where this candle was. So now it's looking like the structure is changing. All the structure change means is if I'm seeing higher highs and higher lows, and it's looking like a bullish structure, then something's happening, making lower lows and lower highs, and now it's looking like a bearish structure. And that's exactly what we start seeing right here. This is like the peak of this move right here. It wasn't moving above this level. Once we see it make lower highs and lower lows, now we know that we're making a move to the downside. But you don't really know where to get into a trade if you don't have these levels marked off. Well, all right, this gonna be the last example for this video, because I'm pretty sure y'all probably kind of get it by now, right? So we looking at price, you know, do whatever it's doing right here, and to come right here and stop, and we see a big move up right here, right? When it's stopping, we see a big move up, instantly level, right? That's the lowest point of this move. Then we see it stop and retrace, right? Before it continues this move up. Same thing, we see a good move up, and then you see the price, it's not really doing nothing. So we got another level right here. And move up a little bit, but it still come back down to this level that you just made the day before that. You can get into a trade off of that right there because it just came back to a level that you made and bounced off of it. But even if you didn't do that, still marked off this level. Got another move up, good move up here, boom, where the price got flat. Cool, we'll mark this off. The price stayed here for a long time. So in this whole move up, we got, and then we finally get the top of this move, right? And we'll get into how to use that to get into a trade in the next video that we got on key levels. The next video is not going to be another like video pertaining to the chart. It's going to be like halfway a Q&A, like questions that I know people probably have at the beginning of this. And then also it's going to be like a psychology video too, just to go into it, because it's really like, it's really a low percentage of actual trading knowledge and like 80% psychology. It'd be you versus your brain in the market, man. But yeah, that was it for this video, man. I appreciate y'all for watching. Make sure y'all subscribe, y'all like this video, send this video to somebody you think might use this. If you want to join the Get Money team, man, join the Discord. It's in a link in the description. In there y'all can ask me any questions y'all got about this. And yeah, appreciate y'all again for watching, man. Till the next video, let's get money.